So let's take a look at the financial statement impact. So our balance sheet presentation, so we're looking at Crabtree Company. We have our current assets, we have cash, notes receivable, and then if you look at accounts receivable, so we have our accounts receivable balance of $445,000, less the allowance for doubtful accounts of $15,000, gives us our net accounts receivable of $430,000. Interest receivable, and then you can see we have merchandise inventory at lower of cost, first in, first out method. So what does that mean, lower of cost or market? So if we look at our spreadsheet here, so we see we have 4 items, A, B, C, and D. Our quantity, our cost price, and then our market price. Market price is what you can buy the inventory for on the open market. So if we look at item A, for instance, in row 4, so we have 400 units, and our cost was $10.25. So our cost of that inventory was $4,100. But we can go out on the open market right now and buy it for $9.50. So if we take the $400 quantity times $9.50, the market value of the equipment is $3,800. We record inventory at lower of cost or market value. So you pick the lower of cost or market, which in this case is market at $3,800. So we're going to record our inventory for item A at $3,800. We do the same analysis for the other 3 products, and we in column G, our inventory value ending is $15,070. So for receivables, accounts receivable is a current asset if a collection is expected within a year. Most receivables are. Typically you have receivables and it's a net 30-day payment term or net 45. Typically accounts receivable is a current asset. And then it's reported at net realizable value. So remember on the income statement a couple slides back, we had accounts receivable and then we said less allowance for doubtful accounts, and arrived at the net accounts receivable number. Inventory. So damaged inventory is reported at the net realizable value. And net realizable value means the selling price minus the cost of disposal. So if the selling price of something is $8 and it cost us $6 to send it to the recycling center, the net realizable value is $2. And we record our inventory always at lower of cost or market value, which we looked at the spreadsheet in the last slide. And that's the end.